Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you about the meaning of the term lease. What are the contents of lease agreement and what are the advantages of leasing. These three things I have explained in the last video. Now this is the continuation of the last video. In this video, I'm going to explain you about the disadvantages of leasing and also the types of lease. These two topics I'm going to cover in this video. It's very important for writing in examination. All the contents, very frequently they will ask what is the meaning of the term lease and what are the advantages, disadvantages and types of lease. So if you have not watched the last video, go to the playlist of my channel. Select the subject Financial Institutions and Markets. Watch the video on leasing. Be clear regarding the concept of leasing. Actually, leasing is an arrangement in which a business will get an opportunity to use the asset without acquiring the ownership or title. Without owning the asset, a business can be able to use the asset. That arrangement is called leasing. Two parties are there. The owner is called the lessor and the person and the business which uses the asset is called the lessee. There is an agreement between the lessor and the lessee. That lessor will convey the asset to the lessee. Lessee will make use the asset and periodically will pay rental. Lease rental will be paid by the lessee to the lessor. That is the meaning of the term lease. Now I'm going to start the disadvantages of leasing and types. So before explaining that, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. So disadvantages. The first disadvantage of leasing is not suitable for project finance. Project finance means when a new project is taken up or a new business is started. In that case, it is not suggested to go for leasing. The business should go for purchasing the asset. Why? Because when a business is new, there is no experience. There is no certainty when it will start getting profit. So it will take a long time to recover, to get the cash inflows. Only after a period of time, the cash inflows will start. But lease agreement, according to lease agreement, the lease rental will be paid periodically, whether cash inflows are there or not. So then it will become a problem for project finance. That means new project, if it is taken up, don't go for leasing. Purchasing of the asset is better option. That is the first disadvantage. Second disadvantage is termination. It is not possible to terminate the lease agreement once it is signed unless a heavy penalty is paid. So the contract will become non-revocable. It is non-revocable, non-cancelable. So carefully you have to enter into lease agreement because it is not cancelable, not terminated unless you have paid heavy penalty for cancelling the contract. Next is loss of tax benefit. Certain tax benefit will be given if the business purchases the asset. Just like in India, the government will give subsidy. The government will give incentives if the business is set up in a backward area, and these incentives or subsidy will be given only if the asset is purchased. If the asset is taken on lease, no incentive, no tax benefits will be given by the government. That is one of the disadvantage. Next is variation clause. Sometimes in the lease agreement, a variation clause will be applied where the rentals structure, the lease rental structure will change whenever there is a change in inflation rate or interest rate or depreciation rate. So if variation clause is applied, then it will be a problem for the lessee because the lease rental will get changed. Next one is inability to renovate, actually making the changes in the asset, that is called renovation. So renovation can be done only by the owner, that is lessor. No renovation, no changes in the asset can be made by the lessee. That's a drawback. If the asset is owned by the lessee, then the business can change. The business can change the asset at any time. But here the lessee, not being the owner, has no right to renovate or make any changes in the asset, and this may hinder the optimal use of the asset. When the asset cannot be changed, we cannot be able to optimally use the asset. Winding up of the lessor company. Sometimes the lessor company is bound up. In that case, the asset has to be returned back, depriving the use of the asset by the business. So in a situation where leasing company or the lessor is wind up its business, then the lessee will be deprived of the usage of the asset, and we have to look for another lessor. That means all of a sudden, if the lessor company was wound up, then what will happen? The lessee has to return back the asset. The business of the lessee will get disrupted. Then no ownership rights. The lessee gets only the right to use the asset. The lessee cannot make alterations or improvement in the asset without the prior approval of the lessor. The lessor may also put some restriction on the lessee. Lessee cannot claim depreciation. There are many disadvantages of not owning the asset. First of all, when the lessee is not the owner, they cannot charge depreciation. That means without depreciation, our tax liability will be more, our income will be more, so tax liability. So no depreciation advantage is available to the lessee. Apart from that, the lessee cannot make any alterations, any changes in the asset to suit his business requirement. The disruption. In case the leasing company is wound up, the lessor may take back from the lessee, disrupting his business operations. There is no certainty that the business will be continued. If the lessor company is wound up, then the lessee has to return back the goods. That means the business of the lessee will get interrupted due to the winding up of the lessor company. Next one, financial commitment. That means the rental charges are fixed. It cannot be changed. Once an agreement is signed, compulsorily the lessee has to pay the lease rental, whether they are having the money or not. So irrespective of financial position, the lessee has to pay lease rental on a regular basis to the lessor. Without seeing that we are having the cash or not, compulsorily they have to pay. It's a compulsory obligation on the part of the lessee. Now, disadvantageous position. The position of the lessee is somewhat disadvantageous. How? The lessee stands in a disadvantageous position unless he has the right to review such lease after the expiry of the primary period. What is primary period? I'll explain in these types of lease. First of all, during this primary period, the lessee does not have any opportunity of reviewing the lease agreement. Purchasing the asset will be better than leasing for those assets whose value is likely to appreciate in a future period. There are some assets whose value will appreciate in future. For those assets whose value is going to appreciate in future, purchasing the asset is better than leasing it. So 10 disadvantages I have explained of leasing. So in examination, you can write confidently about these 10 disadvantages if you have watched this video with full concentration and keep writing some notes, whatever I am explaining. In this way, you can get a good command on the concepts. Now, types of lease. Very important topic, frequently asked in examination. What are the different types of lease? Actually, lease is an agreement between two parties. In this agreement, so many clauses are given regarding the cost of the asset, regarding the rental value, regarding the period, regarding the risk and reward. All these terms are there in the agreement. So according to these terms, according to the clauses given in the lease deed, the lease are classified into 5 categories. So leasing is an agreement between two parties. It allows a lot of flexibility because it's a mutual agreement between the lessor and the lessee. So lot of flexibility is there. The agreement will be made according to the requirement of the lessor and lessee. So depending upon the transfer of risk and reward to the lessee, the period of lease, number of parties to the transaction and other factors, lease agreements, lease types are of 5 categories. Considering all these factors, the first type of lease is financial lease. Second, operating lease. Third, sale and lease back. Fourth one is leveraged lease. And last, fifth one is cross-border lease. In this way, all the leases are classified into 5 categories. The first very important type of lease is the financial lease. Financial lease is a type of lease where the lessor will transfer to the lessee a substantial part of risk and reward of the asset. When an asset is purchased, it will give the reward and also it has some risk. Risk in the sense repairs, maintenance, obsolescence, accident or any uncertainty may arise which will put to some loss. That is risk. So when an asset is being held, there are reward as well as risk. If substantially all the reward and risk are transferred by the lessor to the lessee, then it will be treated as financial lease. So finance lease is an arrangement in which the lessor transfers substantially all the risk and rewards of ownership of the asset to the lessee on consideration of lease rental. So lessor is transferring the substantial part of risk and reward to the lessee in return for the lease rental paid by the lessee. That is the meaning of the term financial lease. Financial lease is commonly used in case of land, building and very expensive equipment. For costly items, expensive assets, normally this financial lease will be applied. And in this financial lease, we have 2 phases, primary period and secondary period. The primary period is that period in which the lease is non-cancelable, non-revocable. It cannot be revoked. So primary period covers major part of the life of the asset. Major part of the life of the asset. In this primary period, the lessor will recover the amount of investment along with return in this primary period. The rental charged will be more during this primary period. Once the primary period is over, secondary period will start. In secondary period, there is an option to the lessee to buy the asset or they can pay a nominal lease rental to the lessor in the secondary period. Because almost the investment is recovered during primary period. Whatever secondary period return they will get, that is the excess money. So normally the secondary period lease rental will be less. And in that period, mostly option will be given to the lessee to buy the asset. Now, what are the features of finance lease in examination? They may ask you, what are the features of financial lease? The first feature is the lessor is the legal owner of the asset. The risk and reward are substantially transferred to the lessee. Very important first feature is the owner, no doubt, the owner is the lessor, but the lessor has substantially transferred the risk and reward to the lessee. That means whatever benefits from the asset, the lessee will enjoy. And whatever risk is there regarding repair, maintenance, accident, obsolescence, that will be borne by the lessee. That is the first feature. Second one is, it is irrevocable or non-cancelable during the primary period except on payment of heavy penalties. So in the lease agreement, it will be written that it is non-cancelable. This finance lease is non-cancelable, non-revocable. It will not be taken back. unless a heavy penalty is paid. That clause will be given if the lessee wants to terminate, cancel the agreement. They have to pay a huge penalty, then only the contract will be terminated. Thirdly, the asset is fully amortized over the life of the lease. That means the investment cost will be fully recovered during the primary period of the lease. Next one, the primary period of the lease term is usually equal to the useful life of the asset. So normally, the primary period is the duration which is equal to the estimated life of the asset. Example, if the estimated life of the asset is 10 years, then the lease period may be 9 years or 10 years, like that, approximately equal to the life of the asset. Simply remember, the duration of the lease or the primary period of the lease will be equal to the life of the asset. Next one, the lease rental charged by the lessor during the primary period of lease is sufficient to recover his investment. The lease rental for the secondary period is much smaller. Just now I told you two phases are there in finance lease. First phase, primary period; second phase, secondary period. During the primary period, it is non-cancelable, non-revocable, and the lease rental will be high, and the lessor will recover the whole amount of investment along with return during the primary period. And during secondary period, the lease rental will be smaller. In that case, the option will be given to the lessee to purchase the asset or pays nominal lease rental. Next one is, although lessor pays for the asset, it is the lessee who negotiates the terms of purchase such as price, delivery, installation, warranties, maintenance and payments. So normally this lease is an agreement. Actually, the owner of the asset is the lessor, but the terms normally will be negotiated and the terms normally will be fixed by the lessee. That how many years they can be able to pay, how much rental they can be able to pay, how they can be able to face the maintenance and repairs and warranties, etc. Next feature is the maintenance, insurance and servicing of the asset is the responsibility of the lessee. The risk of obsolescence is to be borne by the lessee, because in finance lease, the substantial part of the risk and reward will be transferred to the lessee. So in that case, the maintenance, the insurance, the risk of obsolescence, all these things should be borne by the lessee. Next, last one. It imposes a fixed obligation on the lessee in the form of payment of lease rental that cannot be avoided. It is just like paying interest on outstanding debt. When a person has taken a debt or loan from bank, compulsorily interest will be paid, whether the business is having cash inflows or not, whether business is getting profit or loss. Compulsory interest has to be paid. Similarly, this lease rental is also a compulsory obligation on the part of the lessee to pay periodically to the lessor, whether they are having the cash or not, whether the business is earning profit or incurring loss. It's a compulsory obligation on the part of the lessee. So in this video, I have explained you about the 10 disadvantages of leasing and the types of leasing. Out of 5 types, the first, financial lease, I have explained. In the next video, I'll continue this topic and will explain you about the other types of leases and also the differences between hire purchasing and leasing, inshallah. So watch the video till the end, every video. Don't skip in between. And if you are satisfied with my lecture, share my channel with your friends, with your group, so that more students can watch the video. So give a like, subscribe my channel. And apart from this, I have uploaded so many subjects videos. So visit the playlist to find out what are the subjects I have uploaded. Inshallah, we will continue our discussion of leasing in the next video.